Hope everyone is doing great today. So this is going to be the week ahead here. We'll look at some economic data tomorrow. I'm recording this Sunday night, so tomorrow is July 4th. The Canadian markets will be open for what it's worth, but Tuesday we have factory orders, and then Wednesday we have job openings, quits, and the FOMC meeting of note for sure. Of note on the quits, I did see a little bit of a social media post. I believe it was from some news outlet, basically saying that the great resignation, call it, has been continuing into May. Basically, kind of making their own forecast, I guess. Call it. We haven't had the data yet, but they're basically saying that it's continued even into this economic change because it's been very interesting. Like, I think interest rates have had a very real effect rather quickly. I know people have said, it takes a year or plus for interest rates to kick in, but I think that interest rates are definitely being like felt like a lot quicker. Look at that. Well, I mean, the housing market might be a little bit like might be a little bit of an exception, Colin, but it slowed. And then if you look at actually Canada's GDP, I believe, and we've had April, we had like a positive month, and we're still slowing, but now in May, the GDP is projected to be at negative 0.2. This is for Canada, because I'm up in Canada here, for those who don't know, but I follow the US markets very closely and they dictate everything at the end of the day. And obviously, the US markets are somewhat the place to be at the end of the day. So we'll look at Thursday here, initial jobless claims, all that stuff. And then James Bullard is speaking. Anytime James Bullard speaks, it's definitely of note. He's obviously a very prominent figure. Anytime any Fed member who votes specifically speaks is definitely very important to listen to. And they have, well, they can sure have an effect on the market, especially that day. They can definitely, make the market have a big upturn or downturn for sure. And then Friday we will look at we'll get non-farm payrolls, unemployment, lots of good stuff here. As we can see, Friday is actually pretty big day for sure. So yeah, based off all this, we obviously have a pretty big economic news week coming here. Really couldn't tell you what's going to happen kind of because of that. In my mind, I really don't know what's going to happen this week for sure. I don't want to make a prediction. I'm kind of holding my tongue here, but I I think that we may have, kind of just trade sideways again somewhat all week here. I'm not sure exactly really what's going to happen at all. It's obviously highly dependent on basically all this stuff right here, all the economic news and whatnot. Can obviously anything can happen any given day. So yeah, and then we'll have a quick look at the chart here. Basically, just we've been continuing this downtrend. We had that little bit of a bear market bounce, and now we're maybe in a little bit of a downtrend here. Just gonna see we'll see what happens this week, where we go from here. Again, really couldn't tell you what's gonna happen. I don't have much certainty or really in what's gonna happen this week. Some weeks I have more. I'd be more willing to make a prediction if I was more not confident, but if we had maybe a little bit more clarity, I guess, or whatnot. But really not sure what's going to happen this week. I can say for sure though, we are not going to make new highs or anywhere close to new highs. I can definitely say that, or really anytime soon. We are not going to be making any new highs anytime soon at all. I've been a really big bear ever since the war kind of broke out. I've been a big bear on stocks ever since, well, really the Fed pivoted in November and then inflation started to come out. I've been a bear, and I've kind of, I'm just waiting for it to go to about 3,400, 33 before I really start to buy. 3,000, I would definitely be buying a lot. Sub 3,000, back up the Brinks truck. Absolutely. Look, we'll just pull up a bit of a max chart here of the S&P. Obviously, you can see any any pullback, like look at obviously COVID is a bit of an anomaly, but any pullback, any not pullback, but market crash, it's definitely a big opportunity for sure. We'll pull it back some more here in a little bit. You can see the '08 financial crisis took a little bit longer, but the '08 financial crisis was very bad, obviously. But even at the bottom here, as you can see, if you bought at the bottom, obviously it's impossible to pick the bottom, but and you should never really try to pick the bottom. Like I'm playing very much a bit of a foolish game here, trying to wait for 3,400 S&P, even though in my mind it seems likely we're going to go there. We're in a bear market. If you look at just historically, bear markets last a lot, well, not a long time, but they last a lot longer than this. COVID is an exception for sure, but generally bear markets last a lot longer than this, and they somewhat go down a little bit farther than this. I think the average is about, call it 24%. I think we're at 20. I'm just gonna say 20% off the highs right now. It's kind of, bounces around a lot, but we're definitely in the bear market for sure though. So we'll have a quick little look at the rates here at 2.88. Obviously, a big story last week was the rates for sure. The rates themselves came down a lot. We'll have a little bit of a look at the graph here, as you can see. And we had, this just a huge rise in rates, clearly for sure here. Obviously, the Federal Reserve pivoted in about November, and then a lot has changed since November, for sure. And they're unbelievably stupid, just all-time dumb transitory inflation call is just absolutely boneheaded. And then continuing to buy bonds into March, I believe, and keeping interest at 0% for 2 years, but keeping interest at 0% in 2021 was the huge mistake, just huge. It really is. Like obviously 2020, the economy needed help, the pandemic and everything. You were I don't want to say you were right to cut interest rates to zero, but in effect, you kind of were. The economy needed to be saved for sure. And 2021, just you have to raise rates. You have to. I don't care about COVID. The economy is booming at the end of the day. You have to zoom out. Don't just look at whatever. In my mind, they didn't raise rates because of COVID. And it's really the only reasonable explanation on their part, which is just boneheaded in of itself. The economy was absolutely booming in 2021. You have to raise interest rates. I have a video out on that. If you guys would like to check it out, I go into detail a lot more. It's on the channel. If you guys want to check it out, that would be great. And then we'll have finally a look at crude oil, a little bit of crude oil news here. And yeah, overall, I'm sure you guys have known if you follow the channel here, I'm a huge bull on energy stocks, especially oil stocks and oil in general. Just love it, love it, love it. Oil is the only thing I would suggest buying in the short, medium, and long term that would make you some money. I would say is oil, oil, and energy stocks. Like it's really the place to be now and for the long, medium, and short term. We have a huge waves of dividends, of buybacks coming in 2022 and debt targets being achieved. And once those debt targets are achieved, evidently we will get, dividends and buybacks. And this is continuing a lot in 2022 and 2023. Companies are not drilling, they're focused on return to shareholders. This is absolutely different. There's never been a time like this for energy stocks in my mind. This is unprecedented. It's the perfect storm. We had negative oil in 2020. You have just all these factors. We're going to have, like it says right here, but triple oil in triple digits is here to stay for sure. 2022, I would say, we might see, $90, $80 oil, but like all those companies are still making a lot of money at $90, $80 oil, and they will continue to achieve their debt targets and return capital to shareholders. One company they have about 7-8% dividend right now, and it's sustainable at $50 oil US, which is crazy. 7-8% dividend, and they are also just announced the full amount of buybacks they can. They're going to try to achieve it. Obviously, I think they will, with the price of oil being what it is. But yeah, overall, guys, for recommendations, I would really say oil, defensives, big cap tech. And I kind of want to say the bank stocks, but really, if you like equity, any equities, like companies a lot, really, but specifically, I would buy companies, really. But if you like, your companies, don't be afraid to nibble. Even if I say we're going lower, I think we really are. It's definitely it's an all right time to buy here. I'm kind of being careful with what I say here, but obviously we've come down a lot. But really, just oil, especially defensives for sure, and then big cap tech and the banks too. I want to throw in because I think banks have come down. They've come down a lot, and I think I like the banks. To be honest, I've at the beginning, I like November about, since the Fed was pivoting, interest rates were going to be going up. I was a bull on the banks, but obviously they've come down a lot, and I was wrong on that. But with interest rates going up still, it's definitely going in the bank's favor. Obviously, obviously a recession and stuff would not be good for the banks at all. But yeah, I have a little video on that if you guys would like to check it out about the banks. But yeah, overall, guys, I would just, say nibble a little bit here if you want. And yeah, that's, my opinion. Take it for what you will. And yeah, hope everyone is doing great.